You watch a stock move 8% in 40 minutes. You weren't in it. You knew about it. You had it on your watch list. You just didn't take it because the setup wasn't clean. And now it's moving. And your chest is doing that thing, and your hand is already on the mouse. And your brain is already doing the math on how much you would have made if you just clicked buy when you first thought about it. So you click buy. Not because the setup is there, because you can't stand watching it go up without you. This is FOMO. And it is not a personality flaw. It is not a discipline problem. It is biology. Your brain's threat detection system fires before your rational mind can even catch up. By the time you're thinking about whether you should enter, your finger has already moved. The emotion came first. The justification came second. The loss comes third. This is the part most trading content skips. They tell you to just be more disciplined. They tell you to follow your plan. What they don't tell you is what actually happens inside your trading when you go 30 days without a single FOMO entry. Not what you think happens, what actually happens. Day 1. You sit down at your screen. The market opens and something immediately runs. You had no position. The setup wasn't on your list. You watch it go. It moves 5%, then 7%. The familiar pull arrives right on schedule. Your watch list is sitting there with your pre-planned setups and none of them have triggered yet. The right thing to do is wait. So you wait. And the waiting feels exactly like losing. Not because you are losing, but because your brain has decided that watching money move without you is the same as losing it. You don't enter. You close the chart. This is the first small thing. It does not feel small. It feels like restraint so uncomfortable it borders on physical. But you did it. One FOMO pass. One decision that cost you nothing. Day 3, a stock gaps up on news. The trading chat you follow is exploding. Screenshots of gains, numbers in green. Someone made $2,000 in 11 minutes. You see it, you feel it. You don't trade it, because it was not on your plan before the open. You sit with the discomfort the way you sit with a song you hate that you can't turn off. Here is what you don't know yet. That trader who made $2,000 in 11 minutes, 3 trades later, same session, gave $1,700 of it back chasing the next move. You won't see that screenshot. Week 2. Something starts to shift, but not in the way you expected. The shift is not confidence, it is not calm, it is clarity. When you stop reacting to every move the market makes, you start to actually see your setups, the ones you identified before the open, the ones that took you 45 minutes to find the night before. They start to look different when they're the only thing you're watching, instead of one of 17 things competing for your attention. Your planned trades have a win rate around 64%. Your FOMO entries have a win rate closer to 31%. You probably already knew that somewhere, but knowing it and seeing it are not the same thing. In week 2, with nothing to distract you, you start seeing it. Day 11. Your pre-planned setup triggers. Clean entry. You take it. The trade works. Not because you were lucky, because you waited for the exact condition you identified the night before. And it arrived exactly where you expected. The profit is not large. But the clarity of the trade is something you haven't felt in a long time. This is what trading is supposed to feel like. Not the rush, the precision. Week 3. The market has a volatile session. News drops mid-morning. Everything moves at once. Old you would have been in 4 trades inside 20 minutes, chasing every spike, justifying each one with a half-formed reason. New you watches it happen. The volatility is real. The moves are real. And none of them are your trades, because none of them were on your plan before the bell rang. You close your platform at noon. You had one trade. It hit your target. You're done for the day. The session that used to cost you $400 in impulse trades costs you nothing. That $400 doesn't show up as a gain. It shows up as not a loss. And not a loss, repeated enough times, is indistinguishable from winning. Something harder happens in week 3. You realize how much of your trading was actually entertainment. The opens, the chasing, the watching charts move while your position was live. the checking and rechecking the P&L every 4 minutes. None of that was trading. All of it was stimulation. FOMO doesn't just cost you money on bad entries. It costs you the ability to think clearly on the good ones. Your brain doesn't distinguish between profits from disciplined trading and profits from reckless trading. It just wants the dopamine, and when you cut off the dopamine loop, the first week feels like withdrawal. The second week feels like silence. The third week feels like work. And work in this context is the goal. Day 22. You miss a move on a setup you'd been watching for 3 days. It triggered overnight while you were asleep. You couldn't have taken it anyway. But the old thought pattern arrives on schedule. You count the paper profits. You calculate what you would have made. You sit with that number for about 90 seconds, and then you let it go. Because you've learned something this month that most traders never learn. The market is not withholding from you. It is indifferent to you. The move happened. It wasn't yours. Another one is coming. The market runs on an endless schedule of opportunities. Missing one is a non-event, when you know your next setup is already defined. Day 30, you sit down and look at the month. Not just the P&L, though the P&L tells a clear story. Fewer trades, better entries, a win rate on your planned setups that is almost double what it was when FOMO trades were dragging the average down. But the number that matters most is one you didn't expect to be measuring. The number of sessions where you ended the day feeling clear, where you made your decisions before the market opened and then simply executed them, where the result felt connected to the process instead of disconnected from it. That number is almost every day. That has never been true before. Here is what 30 days of zero FOMO actually is. It is not a discipline achievement. It is a data collection experiment. You spent 30 days separating what your edge actually looks like from what your emotions were adding to it. Most traders know they chase. What they don't know is exactly how much it's costing them. After 30 days, the FOMO trades were not a minor drag on your performance. They were the difference between a strategy that works and a strategy that appears not to work. Your strategy was never the problem. There is something else that happens in month 1 that nobody prepares you for. You become a different person in front of the screen. Not calmer exactly, more deliberate. You stop experiencing the market as something that is happening to you and start experiencing it as something you are navigating on your own terms. That transition is quiet. It happens somewhere between day 18 and day 24 for most traders. You don't notice it while it's happening. You notice it when someone in your trading group is spiraling about a missed move. And you realize you have nothing to say because you genuinely don't feel it anymore. Not because the move didn't happen, because missed moves stopped feeling like losses 3 weeks ago. The trader who eliminates FOMO for 30 days and the trader who doesn't are executing the same strategy. They are not getting the same results. One of them is running the strategy, the other is running the strategy, plus the emotional tax. And the emotional tax, according to research on active traders, costs an average underperformance of 6.5% annually compared to those who don't chase. That number compounds just like everything else in markets, except it compounds against you. You started this month thinking FOMO was a habit you needed to break. You finish it understanding something different. FOMO was never about the trades you took. It was about who you were becoming between the trades. A person who couldn't sit still, who needed the market to be moving in order to feel productive, who confused activity with progress and noise with information. 30 days without FOMO doesn't just improve your trading. It shows you what your trading actually is when you stop interrupting it. And most traders, if they were honest, have never seen that, because they have never stopped long enough to look. The market will be open tomorrow. Your setup is either there or it isn't. If it's there, you take it. If it isn't, you close the platform. That sentence is the whole strategy. It took you 30 days to believe it. Now you've seen what 30 days without FOMO can do. But the real question is, how do you actually stop FOMO in the exact moment your brain wants to chase? In this video right here, I break down the one practice that kills FOMO. I will see you there.